Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on VGUARD. Our analyst reiterates buy on VGUARD as Q1 numbers exceeded estimates driven by broad-based sales growth and gross margin recovery. Management has maintained 14 to 15% revenue growth guidance for FY24, which will be led by the festive season. GPM is expected to expand by 100 to 150 bips and OPM is likely to be 9 to 9.5% in FY24, led by volumes, better product mix, softening of commodity cost and depletion of high-cost inventory. Sunflame would have a revenue run rate of Rs 300 to 350 crore in FY24. As the company gradually unlocks synergy benefits in geography and product portfolio, we build in revenue CAGR of 15% and PAT CAGR of 39% over FY23 to FY25 estimates. The stock trades at a PE of 35 times its FY25 estimated EPS, including Sunflame. Next on radar is Ratnamani Metals. Our analyst maintains buy on Ratnamani with a revised price target of Rs 2,950. Recent surge in order book of Rs 2,921 crore, up by 20% quarter-on-quarter, strong balance sheet and dominant domestic position in steel tubes and pipes make Ratnamani Metals well placed to capture medium to long-term growth opportunities from oil and gas and water space. Q1 performance was strong, led by superior order execution and margin expansion of 415 bips year-on-year, and thus consolidated PAT of Rs 135 crore, which is up 56% year-on-year, was significantly above our estimate. The company's new capex plan of Rs 350 crore, asset turn of 1.5 to 2 times for expansion of both CS and SS capacities and would drive the next leg of growth for Ratnamani Metals. At current market price, the stock trade at 33.7 times FY24 estimated EPS and 27.4 times its FY25 estimated EPS. Next, we have an update on Bajaj Consumer. Our analyst maintains buy on Bajaj Consumer with a revised price target of Rs 280. Bajaj Consumer hair oil volume grew by 10.5% versus category volume growth of 2.8% in Q1. Category volume growth recovered to positive trajectory after 8 consecutive quarters of a lull. As rural demand picks up gradually, hair oil volume growth will improve to double digits in the quarters ahead. Bajaj Consumer hair oil volume growth would beat category growth close to double digit in the coming quarters. Product launches will continue to scale up with distribution expansion and market share gains. Operating profit margin will consistently improve with benign input prices and better operating efficiencies in the coming years. Despite strong run-up post our upgrade, stock trades at an attractive valuation of 19 times FY24 estimated earnings and 16 times FY25 estimated earnings. Last we covered Zee Entertainment. Our analyst maintains buy on Zee with a revised price target of Rs 350. As NCLT's approval of Z-Sony merger removes the overhang plaguing the impending merger. With all approvals in place, the merger is likely to be completed by September end. The Z-Sony merger is expected to benefit various stakeholders by enhancing competitive positions, bringing synergies, increasing shareholder value, and offering a broader range of content to viewers, thus resulting in re-rating of the stock. As per the counters of the merger agreed upon, existing Zee shareholders will get 85 shares of merged entity for every 100 shares held in Zee Limited. Zee would get delisted and later relisted as merged company after exchange procedure. In Q1, company reported beat across parameters as expectation for quarter were low. Pickup in subscription revenues following the NTO 3.0 order and slow but gradual recovery in ad revenues are positive that was reported in Q1. We estimate pro forma PAT of the merged company at Rs 2,484 crore in FY25 estimate and Rs 2,780 crore in FY26 estimate. And the merged entity will have outstanding shares of 173.6 crore. This translates into an EPS of 14.3 for FY25 and 16 times for FY26 estimate. We value the merged entity at 22 times its September 2025 earnings estimate and arrive at a price target of Rs 350. Z-Sony merger would act as a re-rating catalyst. For more detailed disclosures and disclaimers, please refer to our research report or contact our nearest branch. Please read the risk disclosure document issued by SEBI and relevant exchanges and terms and conditions on sharekhan.com before investing.
Thank you for watching. To keep up with the latest from Sharekhan, make sure you subscribe to our channel. You can also download the Sharekhan app for all your trading and investing needs. Investment in securities market are subject to market risks. Read all the related documents carefully before investing.